Hey, what's going on, guys? This is TerrenceRe, and I'm back at you with another stock market update. We are also doing this update. We're going to go over some intraday Elliott wave analysis on the SPY or the S&P 500. Right now, as we're winding down the market today, the market looked like it's accelerating to the downside. You guys can see that I had this little range breakout. Excuse me, it hasn't broken out yet, but I highlighted this range on a previous show, showing you that the S&P 500 has been in this box for the past week or two, about 2 weeks, and it's just trading a range after it filled in this gap right here. So, looking at the day, the market actually sold off earlier, and then we got a little bit of news, and then the market came back up, uh, gave up some of the downside, and now it looks like as the market's closing, we do have some big news coming in tomorrow. So maybe, one thing that I've noticed is that some of the news is beginning to slip out towards the end of the trading day. Take what you will from that. I don't know if it's an accident or not, but some news. I was just listening to CNBC, and they came in with some news, and as they came in with that news, I started to see the futures go down. So we looking at the futures are down. The Russell futures are down almost 1.25%. The Dow futures are down 0.5%. The Nasdaq futures are down 1.5%, and then you have the S&P 500. The SPOOs are down 1.25%. So Tesla gave up its little gains from yesterday. You can see, I'm gonna pull up Tesla. Let's go ahead and take a look at Tesla. And you'll see that it's still holding right there on that little support level, that Fibonacci expansion off of this bear flag from back in September. This is that last level. Will it hold? Will we get a bounce there? I'm hoping so. I got a trade. I'm 100% down. Like that, I had bought a call spread somewhere back in here, and it's continuing to run down. But one thing about trading spreads, it's already at max loss, so I can't lose no more money. I'll just hold it and see if I get a bounce to be able to try to, make a little bit more money out of it, if at all possible. But right now it seems like this level is holding. So, maybe we get a bounce in here. I don't know I'm not quite sure how I feel about that bounce, because we do have some news. I think a jobs report or something like that coming out tomorrow on Friday. And with that being said, the main thing that I wanted to talk about was my wave analysis for the S&P 500. So let's pull up. I'm gonna pull up TradingView, and I published this maybe 15 minutes ago on Twitter. And so you can follow me on Twitter and you get live updates of charts. So sometimes I just tweet a chart out. And on TradingView, you can see, like, now this is the 1 hour. So this is an intraday chart on the 1 hour. We had from this down move right here, I counted that as one wave. This pullback, I counted as two. And then all the way down here to the 2618 would be my three wave, where I got divergence on my MACD. And you can see right now and this is that box that I highlighted on the daily on the SPX. This is that box, that range. And we go into that range during the fourth wave. So, some people would say here, it could have been here. Like you could have counted this the end of the third wave. Either way, either or. I don't have to be exact with this being here or here, right? The main thing is if you think that this range is your fourth wave, then I should get a breakout to the downside for my fifth wave, right? And that would leave my target, somewhere down here around 360, right? 357, $357.65 to be exact, on the SPY. So me, with that bias, I have a put spread on. I still have 29 days in that put spread. I think it's about even at the current moment. I may have been up a couple bucks today, but we needed to break out of that range to go to the downside in order for that analysis to be right. Gold even pulled back a little bit today. So I'm gonna close this out and then we will go back to our, go back to the Thinkorswim. And if we take a look at gold, the gold futures were down today. Yes, close the tab. And if we come over here and look at the gold futures, you can see we had a down day today. And you can see the range that I have, this little, what they would call like a pennant or a ascending triangle. You can see it's bouncing and playing around in there, right? See, it's so which way is it? Is it gonna bounce all the way up to the 100 on the Fibonacci expansion? It's possible. I still do think that gold is gonna continue to go up. I took profit in another account where I owned the ticker symbol, and that's the bell. Where I had the ticker symbol GOLD. I actually took profit. Like I was like, ain't no sense in. I can always buy back in. So if it breaks out down to the lower side, then I'll just get in. I'll even buy in on an up day. But I was like, I might as well take some profit off the table. And I also in another portfolio, in a longer term portfolio, I did buy further out of the money put in the SPY to trade that bias, since I do believe that we're going to go to around that level of 360. I went on ahead and bought a put out at 71 days out from now, and I bought the 360. So that's just one of the ways. I don't advise. Once again, don't take don't take my trades. Right, do your own analysis. I do these videos just so I could show what I'm thinking and why I'm thinking, and I go over some examples of some trades. So if you don't have that bearish bias, and you're bullish, you can go the other way and buy a call, an outdated call. I gave myself 71 days just in case. Like, I'm not oblivious that, so we got a gap up here, right? And then we got a gap here. Now it looks like this gap right here is holding as resistance, right? So I would like to just see it move down, but that doesn't mean that it will. It could come up here and test this. Now my wave analysis would be off. So you would say, like, at what point would I be wrong and know I'm wrong? The market was to come up here, fill this gap, and then go past. It should not go. So this is 1. This would be 2, right? It should not go past my 1. So it should come here, and if it comes here, it can come all the way up here and then go back down, and I will still be right in my wave analysis. It should not take out your 1 wave, right? And so by buying that call, I can only lose the amount of the call that I paid for. If I was to get like short shares, I mean, you could lose if you just had 100 shares and it went back up to around this level and you still holding it, you'd be down. That's what 20. That's almost $20. So you'd be down at $2,000, as opposed to, I think the the put that I bought was like right around like $700. So I feel comfortable with that. Hey guys, hit that like button, hit the subscribe button, and share. Also follow me on Twitter. If you just want the charts, you don't necessarily get my analysis, but you'll get the chart. And a lot of times I just post the chart straight to Twitter. If I don't have time to do a video, I don't feel like, making the studio up. So with that, guys, let's look tomorrow. Watch out for the news tomorrow. Let's take a look at, let's go. Let's see if we can find what time. So tomorrow, look like we got a lot of news tomorrow. We have PMI, labor force survey. That is at 8. And Ivy PMI. I think the labor force survey, that's the one. That labor force survey and then the PMI at 10. So those that news tomorrow could move these markets. So be careful, especially if you're doing like some intraday trading or some day trading. I wouldn't even be in the market like trading on small time frames tomorrow around these times. I'll wait till after 10, and then if I was gonna do some intraday trading, after 10 would be the best time. Like I may even do a little bit of scalping tomorrow, right? But it would be after the news comes out. Look for my little pattern and try to trade it then. Maybe around like 10, I say 10:30 or so is when that move should be set up for you to get in and out. So with that, guys, know your risk, be comfortable with 100% loss, and you'll be good. Peace.